What a day today. Today has been one of those days in the market where obviously it hasn't been the greatest. Now, we're going to be talking about my strategies and pretty much my mindset when it comes to swing trading and investing during times of crashes. This is a very, very common question that I get asked is, Carter, during a crash, during some sort of correction, how do you adjust your approach, your strategy when it comes with mastering and trading the market? So, guys, today alone hasn't been the greatest. One of our positions took a decline of about 3%. We were already up 2% on it, so we're only down 1%. So we're going to be talking about our approach and all that stuff. So I hope you guys all enjoy this. If you guys are new, make sure you guys hit that like button and subscribe. And if you guys want to learn more about swing trading and trading in the market, check out our school. Due to the crash today, we're doing a 50% off sale. Code money, 50% off. Check it out down below. We have private live streams. We got quizzes. We got lectures, everything you guys need for mastering the market. So check it out down below. And guys, let's dive into this here. So when it comes with evaluating a stock here and investing during times of crashes, right? And the reason why I say times of crashes is looking at like the S&P 500 today, you guys can see that it was getting a lot of sell-off. Just looking at this thing isn't really that good. Just the general annihilation, right? Really strong downward trend, which is never a good thing to see. So how do you adjust your approach and all that stuff? So the first thing I always do before I ever place a trade, whether I'm investing during a bull market or some sort of bear market, is I want to understand the stock I'm trading completely. And what that means and what that entails is understanding where I'm going to take my profit, but more importantly, where I'm going to cut my losses. Just with any position you do, there's going to be times where you're right and you can add into your position. And there's going to be times where you're wrong, and it's just better to just cut your losses early and just move on to other plays. So let's look at the stock here, ticker symbol PR. So for me, when I'm wrong, and I'll be very, very transparent with you guys when it comes with my trades. I've been doing this for a very long time, actually over 6 years. So I have no issue being transparent, with my trades. So looking at PR here, one of the things here that I love is it has great support and it has great resistance. So what I mean by this is, one, looking at this red line is the 200-day moving average line. Each and every time it hits that line, it gets good buying pressure, right? So now it hit it here and we had that good move, right? So now I understand where the support line is. It does have some old resistance here at about $15 where it hits it and we get the good sell off, breaks above it, old resistance acting as new support. So we have two support lines. We have the price support. You guys can see it hits it, a couple times, getting good buying pressure. But then we also have that moving average line. So going through my checklist, every time I place a trade, I go through my checklist. I go, okay, what's the stock at? Is it on an upward trend, downward trend, upward trend? Check it off. Is it on a support line? Yes, it's on the 200-day moving average line and a price support. Check. What's the RSI? So for this stock here, when we took the trade, it was trading for near and around a 34 area, in the 34 area. Normally with my trades, I prefer under 30. That's kind of the norm, especially for people that are just starting out. Under 30 will really help you narrow in on stocks that won't sell off super easily. So with this stock here, it was trading for a 34 at the time of purchase. So yes, I kind of went against my checklist. Okay, now for future reference, don't do that, right? So, but the thing about it is I've been doing this for a while, so I'm willing to take a little more risk to have the position. The next thing, am I going to be holding through an earnings report? No, earnings is in next week, so we're fine for now. One of the last ones here, risk and reward. Every time we place a trade, we always got to understand what the risk and what the reward is. So for me, I always go to the hourly chart here, and you guys can see right on this hourly, it had really, really good buying pressure, really forming this nice support line. You guys can see it hits it and we get good tendencies of buying pressure. So when it comes to swing trading, there's two approaches you can have. One is hopping in on the support line. It takes a little more risk because you're buying at a lower price, but it offers more reward comparing to entering on the breakout of the 200-day moving average line. So you guys can see that same red line here. Now we're on the hourly chart. Now, normally what a lot of traders do is they will enter on the breakout. So looking back at previous history, you guys can see that when the stock broke out above the red line, even back in here, you guys can see it broke out within a couple of days. This thing skyrocketed up to almost $17 a share. So understanding that what some traders do is they will enter on the breakout. For me, I do that, don't get me wrong, but I also will have heavy support on the hourly chart that I will enter. So that's kind of what I did here. The good thing about doing that is you can enter here, and honestly, sometimes you can enter here and sell up at the moving average line. For me, I was wanting to be a little more risky and seeing if we can get that breakout. And the thing is yes, I could have taken my profit and just moved on. Looking back, it's very easy to say that, but still, with this position, we're still in on it, so we still have some shares out, and I'm still willing to take a loss on this thing if it does dip down a little bit. So now, getting back to risk and reward. So for me, every time I place a trade, I want to understand that. So hopping in near and around this hourly support here gives us a risk and reward. If we draw it out, if we can get buying pressure back up to old resistance, which is this old selling pressure, and the stop loss right near and around about 1460, right in that range here. So that gives a risk and reward of about 3.24. So risking $1 to make about $3.24, which is really good. So if we do get more sell-off here and it does break down to that stop, I will gladly sell and just move on to other opportunity. I have no issue with that. And the thing is what a lot of traders do is they don't do that. And when the stock does dip down and they don't cut their losses, and then it just starts stair-stepping more and more and more, and before they know it, they've blown their account. So before you ever place a trade, whether you're trading in a bull market, a bear market, you have to have that checklist. And that's why having a trading journal, I know I talk about it a lot, and I'll put it down below, the one that I made, especially for swing trading. You need one of these. Now, you need a notebook. This is a trading notebook, but you can use a 99-cent one from the dollar store. But what you need to do before you ever place a trade is write out your checklist for entry. So you guys can see right on mine, right here, checklist for entry, already wrote out. So doing this will help you narrow in on stocks with opportunity. So let's look at a stock here with opportunity, because honestly, sell-off does bring massive amount of opportunity here. So there's a couple approaches here you guys can have. The first approach here is a stock that is right on a nice support line and could see good tendencies. So going through that checklist, what do we have? Stock on an upward trend, yes. Sold off down to a support line. You guys can see minimum of 3 touches, 1, 2, 3, 4 touches. The next thing is looking at the RSI. So for me, RSI right now is trading for a 32. So given that we are in a possible, not a crash or just a little correction, I wouldn't trade it just because right now it's trading for a 31. So we want to get a little more sell off. So going through this, moving on to another stock here that definitely has a ton of opportunity, and it's a different type of strategy here. This is ticker symbol ADSK. What we look for is a stock on an upward trend, which we have, that is sold off, not down to some sort of support line, but what we look for is that the golden cross. So this is when a lower moving average line, preferably the 50 or the 90, breaks up through the red. The red is the same 200-day moving average line. Looking back at the last time it did that, you guys can see the red, or the blue, break up through the red. You guys can see shortly after, followed by great buying pressure. So we could definitely see a nice move going forward here in the future. Doing this, you still have to have that same approach when it comes with your checklist, but what you need is an under a 40 on the RSI, so it still could be a little high. But given that doing your due diligence, doing your checklist will really help you narrow in on stocks with opportunity. So guys, answering that question, how do you trade with the bear market? Is you take your profits and you cut your losses just a little sooner. Doing that will save you time, save you headache, and given that we kind of know that tides are shifting, I would highly recommend implementing that in your trading strategy. So guys, I hope you guys all enjoyed this. Like, subscribe, and we'll see you guys in the next one. Hope you guys have a great rest of your day, and take care.